Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, look, if you've been with me for any period of time, we talk about compression and expansion. And we also talk about the bands, the upper, lower, and middle band. The way the E-mini typically likes to trade. Lower band, middle band, upper band, middle band, lower band. It is the way of the world. It is the inhale and exhale of the S&P 500. So, last week, we had this upper band ride. Ended yesterday, honestly. I mean, the move up into 40.33.5 got you there. And then, bears took it right back. So, technically, the band ride isn't over, but boy, would it take an effort today to get it back. And what's this green line here? That's the middle band. Now, when I sit down in the morning and I say to myself, all right, are we buy dips or sell rallies, essentially? And especially on shorter term time frames. The main delineator of that for me that's worked extremely well over more than a decade of this is the particular instrument that we're talking about, trading between the middle band and the upper band or the middle band and the lower band. If it's trading between the middle band and the upper band, that's a buy dips tape. It's trading between the middle band and the lower band, that's a sell rallies tape, typically. I mean, it's not, don't run, don't operate your entire existence based off that, but that certainly is a baseline consideration. So what we are doing here and what we will be doing here at some point today, in my feeling is, we're going to go test the daily middle band, the 20-day simple moving average, and that is going to be, we'll flip over to this hourly chart, that will be a big decider as to whether over the course of this next leg of the market, we are buy dips or sell rallies. You can come up to 40.35.25 and fall on your face and do all kinds of stuff, false breakout, head fake up, no follow through, head fake up, no follow through, head fake up, no follow through, head fake up, buy. And that's how it goes. You get expansion. And I was saying in the room, because we've been so damn I've been really stubborn, and I'm not a stubborn trader, but I have been very stubborn with short runners all week because the downside potential of the runner on a short trade, if the consolidation went the bear's way, was going to be really good. And that's really good. So I let a couple of runners round trip from like 20s and 25s and things like that. And it's like, you know what? It's okay because, our day's in a good spot, our week's in a good spot, our month's in a good spot, our year's in a good spot. It's all good. But if we catch the expansion, then we can really let a runner work when we're still letting this particular runner work. This is from our second trade yesterday. We did a ladder down at 72.75. The original trade was up at 40.16. So, and the other thing I will tell you, I don't try to catch the highs. I really don't. You don't sit around and throw darts at every spike. If you throw darts at every spike high, you'll miss all the up moves. If you throw darts at every spike low, long darts at every spike low, you'll miss moves like that. And you'll cost yourself a lot of money. And that's typically because you're trying to catch highs and catch lows, which has infinitely more to do with wanting to be right than making money. Get over yourself. So what are we looking at now? I think we're looking at a test in the middle band. What it does when we get there is going to be very interesting. I like how off of the Europe Open, they did a retest in the monthly pivot underneath, and it was a nice technical hold there. And, they brought it in for another 4 hours. Today's a very important day for the bears. They need to follow through. You can look great for 18 hours. They need to look great for a couple of weeks if they really want to get to some of these places that everybody is dying for them to go. These are the days where you dig in and you take that hope away from the week longs and you keep knocking them out of the box. If you don't do that, we're going back to weekly pivot. Maybe not today, but we will over the course of the week. So, and we have some standard econ the rest of the week. Nothing particularly exciting. Volume weighted average price 39.33. Madonna 25.5. Monthly pivot, you can see it up there at 45.5, and the hourly midband is just underneath it around 42.5. Daily midband's the deal. That is a big deal today, so we'll see how that plays. Okay, last thing. Every day I get at least one email or text or whatever. I missed your video today, et cetera, et cetera. Look, I'm not going to spam you up. My strong suggestion to all of you within the reach of my ears is subscribe on YouTube, follow on Twitter, hit the notification button so you know when the tweet goes out. It's literally one post a day. I am not going to spam the hell out of you with a bunch of crap. If you want to come and be in the room and take advantage of all the stuff we do every day, and it's a lot, you will and should find your way in there. So I don't need to bombard you constantly with, hey, look at me, pick me, pick me. If you want to see the video and not miss it before the open, you need to follow, subscribe, hit the notification button so that when it goes out, it is in your box so you can use this tool to do better every day. All right. Take care. Be safe, be healthy, take care, trade them well. I'll talk to everybody tomorrow. Be good.